Hey, what's going on, my friends? It's your man Adam Ace Spencer here with another video diving into this important news that you might not have heard yet, since everyone is so focused on Powell and, if the Feds are going to raise interest rates, this, that, the other. Obviously, the market has turned a little bearish. So, yeah, let's jump into this important news because a lot of us retail investors know the deal when it comes to the fat cats on Wall Street and how shady these hedge funds are, especially Citadel. And yeah, let's just dive into this article, this news, because this is good. U.S. hedge funds, private equity firms to disclose more data under SEC proposal. And my friends, for, of course, doing my research, bringing you this latest news, feel free to hit that like button. It does help with the YouTube algorithm, so other retail investors, other apes, will have a better chance to come across this video and hear this important news. And also, while you're down below, subscribe to the channel if you haven't yet and hit the notification bell so you can stay up to date on all of our latest and upcoming video content. The U.S. Securities and Exchange Commission, SEC, Wednesday proposed new rules that aim to boost hedge fund and private equity fund disclosures as it looks to increase oversight of the private funds industry and better monitor systemic risks. The private funds industry has drawn fresh scrutiny after hedge fund deleveraging contributed towards turmoil in the U.S. Treasuries market in March 2020, and hedge funds were again at the center of last year's GameStop, GME, meme stock saga. We've had issues and challenges in private funds earlier, and the transparency the U.S. government had into it was scant at best, said SEC Chair Gary Gensler. The proposed changes to the SEC's Form Private Fund (PF) rules would require private funds to disclose details of material events within one business day, compared with the current quarterly or annual requirement, depending on the firm. This, my friends, is huge because right now, as it states, right now, currently, it's a quarterly or annual requirement for hedge funds and these private equity firms to basically disclose, their moves, what they're doing, what's going on. Now, what is being proposed by the SEC would be 1 day, which to me sounds like a much more fair and transparent market. Form PF is the primary way private funds disclose purchases and sales of securities to the agency. The draft rule, which is subject to public consultation before it can be finalized, would also lower the Form PF reporting threshold for private equity funds from $2 billion in assets under management to $1.5 billion to capture more firms. U.S. regulators under the administration of President Joe Biden have expressed concerns over private funds' excessive use of leverage, which raises the risk that firms will not have the ability to absorb even modest losses when hit by adverse shocks. And this, my friends, is a huge part of what is going on. Absolutely crazy, excessive use of leverage. And, it's one of those things where you're seeing synthetic shares all over the place, numbers being, the dark pool is ridiculous in terms of what's going on there, and how basically hedge funds are able to borrow shares, and again, excessive use of leverage, because once there's a hiccup, it's going to be a completely disastrous event for a lot of these hedge funds. And even now, we're seeing more and more hedge funds kind of go out of business than ever before. Last year, the U.S. Financial Stability Oversight Council, FSOC, revived a hedge fund working group which President Donald Trump's administration had shuttered to gather better data on risks hedge funds may pose to the financial system. In 2013, private funds managed approximately $5 trillion in assets, but that number grew to approximately $11 trillion by the end of 2020, according to an SEC official, who added that the agency has seen a 70% increase in the number of private funds. Wednesday's SEC measures would not see funds publicly disclose the new data, but would help regulators better spot signs of trouble, such as big losses, significant margin, and counterparty default events, material changes in prime broker relationships, and other events associated with withdrawals and redemptions, the SEC said. Form PF disclosures were mandated by the 2010 Dodd-Frank financial reform law to allow the SEC and FSOC to monitor risks to the U.S. financial system. After almost a decade of experience analyzing the information collected in Form PF, we have identified significant information gaps and situations where we would benefit from additional information, added Gensler. Separately, on Wednesday, the SEC also proposed new rules that would increase the number of Treasury trading platforms captured by the agency's Fair Access Rule, which prohibits platforms from making unfair denials or limitations of access to such platforms, among other things. The changes, which update a 2020 agency proposal, would see so-called alternative trading systems, ATS, that trade government securities be more transparent about how their platform operate. Noah Theron of the Washington-based Managed Funds Association said that the group needs to study the details of the proposal to ensure it does not ask funds to disclose routine activity. We support the SEC's broad goal of obtaining timely and relevant information from market participants in a crisis, he added. So, my friends, I mean, it sounds like there's good news, but at the same time, it also, I don't know. I have mixed thoughts, mixed feelings. It might be the old, the same old, doesn't really want to step up, do his job. I mean, who knows where, I wonder where his money's at. I wouldn't be surprised if half of his money's with shit at all. And he's just like, hey, Ken, take care of me. And I don't know. You scratch my back, I scratch yours. Because it seems like it's just like kicking the can down the street. Like they don't really want to step up and do their job and give us more insight into the BS going on. They're clearly allowing synthetic shares and all of this crap going on the dark pool. And I get it. Like it needs, I mean, they can't obviously be on here on Webull trading with us and M1 Finance. I get that. But at the same time, there needs to just be better and more enforcement, clearly more transparency, but also kind of just a more fair market in which it truly is more fair for retail investors, for regular people, instead of it really only benefiting, the individuals who can kind of manipulate and control and dictate the whole direction of a stock. It's kind of ridiculous what's going on. And this, I mean, yes, it's good news because none of this would be going on if it weren't for all of us with GameStop, with EMC, with not EMC, AMC, with BBIG, with any of these short squeezes that we know, like, okay, there should have been a squeeze here by now, but all of a sudden these hedge funds are getting more synthetic shares and just pulling out more crap from left and right and able to somehow drop a stock 15% only by selling like 100,000. Like it's ridiculous what's going on. But I don't know. This is good news, but it's also kind of like kind of the same old, but it is progress. Any progress is better than no progress. I will say that. But you're seeing the same 1%, the same wealthy individuals at the top just playing their games, controlling what's going on and not really doing their job. That's what it really comes down to. I mean, it's kind of the same BS, but like I said, any progress is better than no progress, but we need to continue to put the pressure on the fat cats, on Gary, on Ken, on all of these old timers. And I look at it like this: with most of these situations, again, we're bringing to light these scenarios, like what's going on, because we just need to hold. If you just get the stock and you hold and you don't do options, you don't have to worry about anything expiring. Like, yes, calls are tempting. You can make a lot of money. Obviously, shorting a stock, clearly, this is what the hedge funds are doing. They're making a lot of money. That said, we have time on our side if we just buy and hold. And that's why I have BBIG in my portfolio. That's why I'm not letting go of AMC as well. So I wanted to just make this quick little video in case any of you out there are, wondering what's going on with the market, what's going on with SEC. Is there any progress being made when it comes to all of this manipulation and the BS going on? Yes, there is some progress being made, and I think a lot of that is credit, due to us. And I think of people like Trades, Keenan Grace. I mean, there's a lot of YouTubers who have been proactive and vocal with helping to bring light to these issues. So I'm loving it, and I'm excited for this little change, but more change to come, because I don't think things are going to end here. I think this is really just the beginning. I'm going to wrap it up there. Feel free to leave a comment down below with your thoughts. I'm curious to hear what you think. 2 videos in one day. Oh yeah, I had to drop this for you guys. But yeah, let me know what you guys think. Comment down below, like this video if you haven't yet, and of course subscribe to the channel. Hit that notification bell so you can stay up to date on all of my latest and upcoming video content. But all right, you already know I gotta keep it moving, but I'll see you in the next video. Peace.